Good morning. I'm Ben Ayers, Dean of the Terry College of Business. It's my pleasure to welcome you to our Terry Third Thursday. This is a monthly event that we have each month at our Terry Executive Education Center, which is the home to both our professional MBA and executive MBA programs. I think we've got some students in the audience today. This is a great event for us for networking with current students, alumni, and other business leaders in the Atlanta area. I'd like to thank the Alumni Board and Zach Deming and Nancy Watley for their efforts putting together today's program. This will be a treat for all of us. I'd also like to thank our sponsor, corporate sponsor, the Bank of North Georgia, as well as our two media sponsors, the Atlanta Journal-Constitution and WABE Atlanta Public Broadcasting. So please join me in thanking them for their support. Upcoming Terry Third Thursday speakers include on September 15th, we'll have Steve Voorhees, and Steve is the CEO of Westrock. On October 20th, we'll have Atlanta Shepard, who is the co-founder of the Shepard Center. And then on November 17th, we'll have Ron Rogowski, and Ron is the Vice President of Global Brand and Sponsorships for UPS. He's also Chairman of the Atlanta Sports Council. Earlier last week, we started the semester off in Athens, and on Monday, I got the pleasure of holding our annual or beginning of the year faculty and staff meeting and got to share some good news, and I'll share that with you today. We really focus on the outcomes for our students, making sure that they graduate with a degree that's valued in the marketplace. This year, 91% of our undergraduate students and 93% of our full-time MBA students were placed within 3 months of graduation in careers consistent with their aspirations, and we are extremely proud of both of those numbers. Those are record highs for us, and it's a great signal of the quality of our students in their preparation in our program and the hard work of our faculty and staff, as well as the support of our alumni and employers. So we are walking on thin air in Athens and just so pleased for last year's graduates and looking forward to the outcomes for the class of 2017 as well. I did want to mention before I introduce today's speakers, we have survey cards on your tables. And it's not specific feedback to Troy's presentation. We know he's going to do a great job. But just to give us a little bit of more information, so if during today's presentation, if you'll fill these out and just leave those on your tables, this will give us some information and opportunity to provide suggestions for our programs. So without further ado, it's my pleasure to welcome the Chairman of the Board and CEO of TSYS, Troy Woods. Troy started his career at Columbus Bank and Trust Company, working part-time in the bank card department, and eventually became the vice president. He then joined United American Bank in Knoxville, Tennessee as Senior Vice President for Card Services. He then moved to Birmingham, Alabama as Senior Vice President of Card Services for AmSouth Bank, and then became Senior Vice President of Consumer Lending. In 1987, he joined TSYS and now serves as its Chairman of the Board and CEO. I know that you're all familiar with TSYS. TSYS is a leading global payment solutions provider, and under his leadership, Troy has helped the company become the #1 third-party processor in North America, one of the top 10 direct merchant acquirers in the U.S., and the #2 prepaid services provider in the U.S., supporting millions of underserved consumers who do not have access to traditional financial services. Troy has received many awards, as you would expect. He is the Alumnus of the Year of the Abbott Turner College of Business at Columbus State. He also received the Thomas Y. Whitley Distinguished Alumni Award from Columbus State and the Alumni Excellence Award by the University System of Georgia Board of Regents. Troy earned his bachelor's degree from Columbus State. He also graduated from the University of Virginia. We're going to give you an honorary degree at Georgia. Graduate School of Retail Bank Management, as well as the LSU Graduate School of Banking. So please join me in welcoming Troy Woods.
Well, thank you very much, Ben. I appreciate that. It's pretty obvious the TSYS marketing department is alive and well with that write-up. They always tend to amaze me with some of the superlatives they could throw into an introduction. But it's really a pleasure to be here this morning. I appreciate it very much. I got to give a lot of credit to Zach. He probably started on me about 8 or 9 or 10 months ago to get up here, and we worked hard and finally found a date that worked. And it sounded pretty good 8 or 9 months ago when we picked August, whatever the day is. And you know how your calendar gets. All of a sudden it's here, and why am I doing this again, Janet? But, with these bookends on each side. But in our conversations, we had a lot in common. He and I both from South Georgia. He's lost some of his accent. I have not. But again, we appreciate it very much for Zach doing that. And I also want to thank and call out Christine again. I met her this morning. There she is back there. And she has just been outstanding. And what an asset you have here to work and coordinate and get me set up. So I want to thank her and recognize her as well. When I was talking to, and thank you very much for no pressure on the, I know Troy do a good job on the survey. When I was talking to Zach about what do you want me to do, he said, well, why don't you just talk about the TSYS story like Barry indicated. And so I gave that some thought, and I said, well, I should be able to do that. You would think a chairman and CEO could do that. And as you heard in Ben's opening comments, I did start my career as a freshman in college part-time at Columbus Bank and Trust Company in the credit card department. So I'm dated. I go way back in the cards payments business. So I was there, and we'll get into that in a minute. I'll get off track if I go down that path right now. So I was thinking about it when he said, you know, you got 35, 40 minutes, we'll do Q&A, which I think Q&A is usually the best part anyway, because I'm probably not going to touch on many of the things you're thinking about or want to ask me about. So I got to thinking 35, 40 minutes, and I was in Newport, Rhode Island last week at a Wells Fargo conference, an investor conference, and 5 hours it took me to work with all the investors that day. Then I'm going to take that 5 hours and boil it down to about 35, 40 minutes. And I saw some of your eyes get big when I said 5 hours. But I'll do my best to work through it, tell you a little bit about our story, how we got started, what we do, and then, you know, open it up with some Q&A. So again, thank you. A lot of stuff on this page, and I'll start at the very top left, give you a little bit about the TSYS history. I've touched on a little bit as it relates to me. But our history goes back, and I have to be a little bit careful as I look around the room. I saw some faces this morning that people like Tim Benson, we all go back, gosh, 20 years or more. And so I have to be careful what I say. And Philip back here has been around a long time as well with Synovus. So I think I'll get it right. Correct me if I do not. But our history really goes back to 1888, when you think about it a minute. I know you're thinking, come on, credit cards hadn't been around that long, and they haven't, but the predecessor to our company was Synovus Financial, which was CB&T Bank Shares, et cetera. And the predecessors to CB&T were founded in 1888. Now don't worry, I'm not going to give you a history along the way, but I am going to skip about 80 years and come up to the mid-1960s. And CB&T put in its first computer, Anna, IBM, an IBM computer back in the mid-60s. And they put the first two things we put on the computer back then, they, was DDA accounts and credit card accounts. Now that was pretty unusual to put credit card accounts on the computer back in the early mid-60s. A lot of banks back then, a lot of FIs, really credit cards was kind of a stepchild of most FIs. That's where you sent the rejects from installment loans for the most part, wrote a credit card. But they did. And Greg mentioned Rick Ursary on the Georgia Power Board. Rick was very instrumental in that, in getting that first computer. He was, I think, a sophomore at Auburn, working as well at CB&T. So a lot of history and a lot of connections. And why that's so important, you'll see in a minute. So as the years went on, the word got out that that CB&T crowd down there had a pretty darn good credit card online program. And so we started selling that credit card program. I think the most we ever got for it was $15,000. And we thought we were taking advantage of most of those people, I can assure you. But along the way, and I'll give you the quick history, we were at a credit card conference down in Orlando, Florida, back in 1973. And I'll give you the abbreviated story here. And as you might expect, cocktail hour kind of thing, and we're working with this executive from Landmark Union Bank and Trust Company in St. Petersburg, Florida. And he was telling us that all of his credit card work was batch, and they fill out all these cards. I know some of you certainly will remember that. Fill out these forms, send it up to Jacksonville, Florida, to Barnett Banks. Now, two bank names that have gone, right? But Barnett was a pretty darn big bank back then, and Barnett would key all this stuff in and make the keying arrows and all that good stuff, and then send all that paperwork back to Landmark Union Bank and Trust several days later. And David Meyer was his name, and he said, we're sending them $60,000 a month to do that. One of our guys at CB&T at that time, who just retired from my board 4 months ago in April, Lynn Page, asking basically to repeat that story again. He was like, give me that one more time, and he did. And Lynn Page on the spot said, well, look, we've got this computer program up there at CB&T that we're running online. We'll put you on it, we'll put you online, and we'll do it for half that. And we got back to Columbus, and we were all looking at each other like, how are we going to do this? We don't have a clue. And this is a true story. At that time, 1973, Columbus Bank and Trust Company did not have a remote terminal in the organization. Not a one. The terminals in the credit card division were on the third floor of our building. The computers were on the first floor, and they were connected via coax cable. We had nothing running remote, and we just committed to Landmark Union Bank and Trust. Well, David called about a week later and said, look, I want to follow up on that conversation. Was that just the cocktail getting in, or are you guys serious? And we said we were serious. I'll skip the rest of it. We got Southern Bell in, Greg. Now, and Southern Bell even said, yeah, I think we got these new modems. And I think we can put a modem on this end and a modem on that end, and I believe we can make this work. That is the beginning of TSYS. And so we converted Landmark Bank and Trust in 1974. So that's when we started third-party processing with Landmark Union Bank and Trust in 1974. And within literally months, their small friends across the way in Tampa, Metropolitan Bank, hey, we want to play, and here we are. We've just continued to grow. Now skip about 9 years, to 1983. And so as you can imagine, in that 9 years, we were continuing to add one customer, just like I was giving you that Landmark and Metropolitan. Believe it or not, the fourth customer we signed was in Anchorage, Alaska. Columbus Bank and Trust Company signed our fourth customer in Anchorage, Alaska, and ran it by satellite. It's amazing stuff. So we continued to grow, and of course, you know what happens then. The non-interest income was beginning to grow at the bank, and the tails beginning to look more like the dog kind of thing. And so the investment bankers show up, right? Any investment bankers in the group? And so they were talking about, look, you really need, the only way you really need to get this non-interest income kind of isolated on the bank's P&L. So they convinced the bank to spin TSYS out. So they did that in January 1983, and of course right after that, the same investment bankers, well, the way that you really are going to get some monetary indication of this thing is you ought to spend some of it out to the public. And so Synovus, which eventually became Synovus Financial, spun out 18% of TSYS in 1983 and retained 82%, okay, in 1983. So we went public. We had 3 million accounts. So we went from 0 to 3 million accounts in 9 years of just, here and there, 100,000 here and so forth and so on. We had $15 million in revenue, hard to believe, and we went IPO, and 185 team members. Now, if you would have bought 1,000 shares of TSYS in 1983 when we went public at $15 a share and held on to it, you'd have $4.5 million today just for that $15,000 investment. So it's done pretty good. It's done pretty good. Now I want to give you just one more piece of our history because I think it's just super, super critical, and like I say, several in this room would understand it and know it. So along the way, we continued to grow, of course, and expanded, and I'll get into that in a minute. But we felt like we were being hindered in our growth for a lot of reasons, being, majority owned by a bank holding company. There were two stocks. Synovus had its stock. We were traded on the New York Stock Exchange, but only, 18% floating. And so we were just continuing to find barriers to our growth, barriers to getting large institutional investors to have interest in our company because of the lack of float. So we finally convinced the board of Synovus to spin us off in a tax-free transaction to spin off their 82% ownership to the Synovus shareholders. And we did that in December 2007, just before all hell broke loose in the financial world. You know it well. I see many of you nodding and shaking your head. Synovus absolutely got caught up in that in late '08 as well. And so you have to be lucky. You have to have good timing. We were extremely fortunate. No telling what would have happened. Would have probably been sold to raise capital for Synovus and so forth and so on. Since we spun out in December 2007, we have just about quadrupled the size of the company in less than 9 years and doubled the number of accounts that we processed for. And I'll get into some of that in a minute. So it's been right time, right thing to do along the way. So that's kind of the history of the company. And we're still on the New York Stock Exchange. When you think about 2007, as I said, Synovus owned 82% of the company. Today, about 78% of our stock is owned by institutional investors. The other 22%, about 5% insiders, and the other 17 or so, retail. And so we went from one owner at 82% to today our top 5 owners own just 30%. And our top 5 owners would be Vanguard, Synovus Trust Department, because of the spin out to so many Synovus shareholders, Fidelity, BlackRock, and State Street. So that's our 5 top holders today, and the rest is kind of scattered. One of the great things that happened at the spin, we were picked up by the S&P 500. For those in the FI business, brokerage business, know maybe better than I, of course. That's very important because of the funds, the index funds, and needing to own S&P 500 stocks. So we're very fortunate to be picked up in 2007 on the announcement of the spin. And of course, we're still a member there. We're a member of the Fortune 1000. I'll talk about these 2 numbers in the middle first. This is our market cap today. So you may have picked up on it a minute ago. When we went public, our market cap was $20 million. And so it's $9 billion today. But what's interesting about that $9 billion, about 45 days ago, it was almost $10 billion. It's been a rough 30, 40 days on the market for a lot of payment companies and for us. They may want to come up in Q&A. I wish I had the answers for all of it, but we have lost about $800 million in market cap in about 45 days. 4.2, that's the revenue that we are projecting for 2016. And again, I mentioned earlier when we went public, it was 15 million in 1983. These bookends, you know, they're not financial, but they just, I think, speak volumes about who we are and part of our DNA. The Civic 50 is an organization that's kind of the overseers, the Points of Light Foundation, et cetera, and they, every year, they recognize the top 50 in the world civic-minded companies. They go out of their way, both in how they let their employees get engaged and involved in the community, and then what the corporation does. We've won this award 4 years in a row. We were just announced maybe 60, 90 days ago, a repeat winner. It's extremely important to us, as well as the one on the right, one of the world's most ethical companies. We've also won that for the last 5 years. I think they, in 2012, they kind of changed their fiscal year, so they didn't do one. But so technically, we won it 4 years in a row that they did the recognition. And that too, if you're selling and in the business, I mean, those two things, I cannot think of much better recognitions for our team members and a company and a corporation than these two. You'll see down at the bottom again, just to kind of framework it, and we'll move on. This is what we touch every day, and we kind of talk about this back home with our team members. 64 million times a day we have an opportunity to get it right or get it wrong. That's how many transactions we touch a day. 64 million a day. So many of you, you know, obviously depending on what card you might be carrying in your wallet, are customers through our customers of TSYS. So we got to get it right. Nothing is worse than being turned down on the authorization, or your statement's incorrect, or your plastic wrong, or won't work. And I'm sure some of you have had experiences lately with the chip card and the terminals. That may come up later. I won't get down that track. But anyway, that's kind of who we are. And I want to keep track of my time. So I'll talk a little about what we do. North America. So I talked about how we got started. Now, obviously, all the way up to 2010, 100% of our business was our legacy business, which is that third-party card processing that I've talked about. Today, it makes up 37% of our revenue at the end of the second quarter. So this is our North America business. We have about 670 million accounts that we process for. Last year we did about 17 billion transactions through the North America group. About 130 customers. There would be people like Bank of America, Cap One, Royal Bank of Canada, Toronto Dominion, Bank of Montreal, Target, you know, Synovus Financial, people like that, Barclays, Citibank, J.P. Morgan, U.S. Bank, all of those banks and many, 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 many others are our customers for credit card processing, debit card processing. We do healthcare processing, FSAs. We do cards and statements, as you might expect, what we call fulfillment. We have a pretty good sized loyalty operation. I'm sure many of you have loyalty programs connected to your card. Our loyalty business is actually here in Alpharetta, right off exit, I think, 10 or 11. And it's been up here from day one. We made an acquisition in New York, moved it down here, and been here ever since. So this is 37% of that business. And kind of what we've been doing the last year or so, a couple of things. One, we converted the Bank of America business back in February 2015. The largest conversion in the history of payments. We did it in a big bang, did it all in one weekend, scared me to death. We've never done anything that big before. Usually, you know, eat that watermelon a bite at a time. We did it all in one weekend, 85 million accounts in one weekend in February of 15. So that's kept the North America region occupied for a while. They've been very busy on things like EMV, that's the chip, for the last, you know, year and a half. Very busy on doing things like Apple Pay, Samsung Pay, Android Pay, all of those things. So that's kind of what they've been focusing on maybe the last 24 months. International makes up 10% of our revenue. Think of international in our business as very, very, very similar to our North American business, except geographically different. There's very, very little difference in what they do. We've just decided from the way we manage our business and the way we report our business and segments to keep them separate. And I'll go around a map in a minute and put that in perspective. They have about 80 million accounts in our international group. They did about 3 billion transactions last year. We do business with people like Royal Bank of Scotland, NatWest, Barclays, Deutsche Bank, PayPal. We do Carrefour, which is the second largest retailer in the world, only behind Walmart. We do 90% of all the credit and debit cards in Ireland. We've gotten so big in Ireland at 90% that the government's involved, because they want to make sure, they look at it as systemic, that if you have a hiccup, this country, 90% of every credit and debit card, particularly the debit, is what really got their attention because of the checking account size of it. So we do Bank of Ireland and Allied Irish Bank and a few others. And I'll go over a map in a minute to tell you kind of where we are. And I'll go back to North America 1 second. Ben touched on it, but let's talk about market share. In North America, we are the largest third-party processor in the United States. We are the largest in Canada, and we are the largest in Mexico. So all those 3 countries make up our North America footprint. So we are number 1. Our international business is the second largest third-party processor in Europe, the second largest third-party processor in Brazil, and the largest third-party processor in China. And I'll maybe touch on that again in a minute. So that's basically our international market. We were in Japan for about 12 years. I just never could really make it work. Tough market. We got out of Japan in 2014. Now these next two, you may have picked up on it a minute ago when I said, this was 100% of our business before 2000. Well, these two were 100% of our business before 2010. What we decided to do in 2010 was pretty dramatic for us. Think of our business as probably everybody in this room has at least 2 or 3 credit cards in their back pocket. That's our legacy business, processing for those customers. But to make those cards work all the way through the payments chain, the ecosystem, is you need merchants, right? You gotta have some place to go to use that card. We never did play in that business except as a behind-the-scenes processor. So we never owned the merchant contracts. We never went out and signed up merchants. But strategically, we looked at this for a couple of years and decided that we wanted to play there. We didn't want to take any more chances of being disintermediated. The ownership of that merchant, the ownership of the point of transaction, strategically was very important to us. So in 2010, we decided to move into the merchant business. And we made our first acquisition there to get started. We bought the First National Bank of Omaha, Nebraska's merchant business. Then we bought a company here in Atlanta called TermNet. And then about 4 months ago, we announced the largest acquisition in the history of our company, $2.4 billion. We bought a company called TransFirst out of Hauppauge, Long Island, New York. It's doubled our business. So we have gone from 0% of our revenue on the merchant side of the world to a third in 6 years. And it went from 16% to basically 33 and 4 months ago by this huge acquisition. So we're now the 6th largest merchant acquirer in North America. So 6 years ago, we didn't even play. Now we're number 6. We're the 3rd largest integrated merchants player. Maybe we'll talk about that later to keep me on track. So that's kind of our merchant business. We go to market primarily 4 or 5 different ways in our merchant business. We have W-2 people. We have 1099. We have a lot of 1099s in our footprint. We have independent sales organizations that represent us. We have about 2,000 partners where we've integrated our software into their maybe dentist practice, medicine, office software, and you sell it all as a big package. We have what we call DSEs, direct selling entities like Mary Kay and Herbalife that have all of our payments embedded into their work. We primarily focus on what we call the SMB market, small and medium-sized business. That's the bread and butter. You can go out and sign up a Walmart and kill yourself for about a fraction of a penny per transaction if you're lucky. And it looks good, big numbers, but you don't make a lot of money there. We do have about 100 of what we call big, large merchants, the Gap, Neiman Marcus. But our focus is in the SMB side, and we have about 650,000 merchants that we now own and process for across North America. And we'll do about $120 billion in volume on that side of the ledger, okay? Up here, now this is not our card, we just process up here, you know, from Bank of America and Cap One. But up here, about $3.7 trillion of credit card purchase volume is what we run through up here. About 120 billion here. So that's kind of our merchant piece. And then to round it out, a company called NetSpend. How many have ever heard of prepaid? Quite a few hands. How many have a prepaid account in here? Not many. Got to work on that, 2 or 3. But so it's only around 15 plus years old, the prepaid business. It's a prepaid debit card. So it's Visa, MasterCard branded, but it's a prepaid debit card where you load your money onto the card. So it's not a credit card, but obviously it's accepted anywhere in the world that Visa and MasterCard are accepted. Again, strategically, we've been processing for some of the companies that are in the third-party program management business for years, kind of like the merchant business. And back about 3.5 years ago, decided that, again, do we just want to be a third-party processor and do all this hard work for pennies per tran, or do we want to own our destiny, own the value chain, if you will? And we decided we did. And again, typical of how we want to play, we want to be in a leadership position. We went out and bought, at that time, the second largest prepaid program management company in the country, a company called NetSpend in Austin, Texas, for $1.4 billion, publicly traded company. And so that's what they do. They have about 5.5 million accounts of those prepaid accounts. About half of them are direct deposit. That's pretty impressive. That's the stickiness of that business to get people on direct deposit. When you think about that market, the FDIC says that there's 68 million people in this country alone that are what they call unbanked or underbanked, where they can't afford to have a checking account, the banks don't want them, the banks have priced themselves out. That's for the most part, our market. If you go into Walmart, you'll find a NetSpend card hanging on what they call the J-hook, you know, the Walmart money card or the NetSpend card. So that's kind of the market we're going after. That's a big market. Other research shows that 25% of the households in America own a prepaid card. Now, I didn't see that hands in this group, but that's pretty impressive as well for something that's only 15 plus years old as a product. It is the fastest growing product in the payments chain. When you think about credit, debit, commercial card, procurement cards, prepaid cards, you know, maybe 1 or 2 more, and look at their growth and their market potential, prepaid's the fastest growing. And not only in that space, but of these 4 channels, it's also our fastest growing top line revenue player of those 4, prepaid. We have, we're in 4 kind of sections, not to bore you with the details of how we go to market, but we have a direct channel, so we do a ton of direct marketing and telemarketing. We have a pay card channel. Customers like SunTrust here in Atlanta is our customers, and so this is where your wages are put on a Visa or MasterCard payroll card. And so we do that for people like Big Lots, Cracker Barrel, big companies like that around the United States, the pay card. Then we have what we call our partnership program, where we run and manage their prepaid program and or utilize their distribution channel. For instance, Brinks. If you ever see a Brinks prepaid card, that's us, that's Netspend. Last year we partnered up with Western Union, same thing. You go find a Western Union store somewhere and find a Western Union prepaid card, a money card, that's us. You will find these cards at about 100,000 locations in the United States. Family Dollar, Dollar General, 7-Eleven, Western Union, Ace Cash Express, places like that. And what's interesting about these cards as well, we got about 130,000 locations where you can load money to this card. And you can do it basically 7 days a week, many times 24/7. What we have found that 8 o'clock at night on Wednesday night is the most dominant load period. Philip, how many Synovus branches are open at 8 o'clock at night? So the world is changing in the payments world a lot. I don't have to explain that to many of you in here with the branch system, the millennials. It's just a whole new world that we decided we wanted to play in. So that kind of gives you some sense of how we set up our business and where our revenue comes from. Pretty busy, but I thought I would kind of bring it home. I said I'd come back and talk a little bit about where we do some of this business. We're now, from that little old 1974 start with 185 people, we now have 12,000 people, and we are in 14 countries, I think, now across the globe, where we have 43 offices in 14 countries. We're doing business in like 80 countries around the globe, and I thought I would just take 2 or 3 or 4 minutes and kind of, well, you can see it over there as well, go through this. I think we have 17 or so cities in the United States. The 2 that I've highlighted, we did pick up with our TransFirst acquisition that I mentioned in April, in Hauppauge, New York. Broomfield, Colorado, and Hauppauge. You'll notice Georgia. I mentioned Alpharetta. That is our mostly our loyalty business. We have in Kennesaw and in Atlanta, we have another 600 or 700 people, mostly developers, project people, programmers here in Kennesaw. And in McDonough, we opened up a call center just south of the airport about 2 years ago. And we outgrew our call center operation in Columbus. And so you'll see we're just scattered all over, nothing really more to call out. Sudbury, Canada is also a call center. We found that our Canadian clients wanted more and more and more to do business with us. And that's obviously a great thing, but what we have found is once we do that third-party processing over the years, it's like, can you do my payments? Can you do my call center work? Will you do my plastics? Will you do my statements? Will you help me integrate? Will you do fraud for me? Will you take my lost and stolen cards? So we just continued to grow in different areas of instead of third-party processing. We have 3 joint ventures in our company. We have a merchant joint venture in San Rafael, California, with a company called Central Payments. We own 75% of it. We have a joint venture in Toluca, Mexico, with 13 other banks called Controladora Prosa. Tisas de Mexico, we own 49% of it. And we are in China. This is unbelievable, just great timing, good luck, hard work. But we now are the largest third-party processor in China. We own 46% of a company called China UnionPay Data. the other 54% is owned by a company called China Union Pay. Now, China Union Pay, when you think of Visa, MasterCard, Amex, those brands, in China, it's the CUP brand, China Union Pay brand. And that's who we partnered with, and we own that JV there. So I'll go around a little bit. Our international business that I talked about is headquartered in London. We have our DP operations in Knaresborough. The majority of our people, though, are in Coventry. We run a call center in Milton Keynes and a call center in Coventry. Our people are in York. Barneveld in the Netherlands is also a call center. We have about 130 people in Russia. They're all developers, very bright, very good people. We have 3 operations in India. Again, all developers, project people, about 500 people in India. We've announced we're going to double that in the next 24 months. And then Brazil, we have an operation in Brazil that we partner with IBM with, and right now, unfortunately, we only have that one customer, a very big customer in Carrefour, you know, still looking to work hard to get that second and third one. But Carrefour, you know, right out of the chute, we signed the big kahuna. But and you can see across the bottom, I think I've talked about some of this, but 12,000 now employees with the acquisition of TransFirst, and a little over 23 billion transactions that we handled across the globe last year. I thought I would kind of wrap it up with some kind of fun facts, and then we'll open it up for some Q&A. This is pretty interesting. I always found them to be thought-provoking, really. And when you think about the size of our operation, you know, I mentioned 670 million accounts just in North America, and another 80 million accounts outside. So obviously, we have a pretty big IBM shop, Anna. So we run about 119,000 MIPS. We are one of the largest mainframe shops of IBM. And of course, that's 118,000 millions of instructions per second capability, capacity. I always just say it's a hell of a lot. And it is. And this next one is even more mind-boggling. As you can imagine, if you've got almost 800 million accounts of any type, you're storing a lot of data, from transaction data, payments data, fraud data, analytical data, address, the last 20 addresses you might have had. I mean, we just keep data. So we store a lot and have a lot of capacity. So we have 9.8 petabytes of storage in our systems. Now that is 9.8 thousand trillion bytes of information. 9.8 thousand trillion. And you probably have already read ahead. I think it's just amazing when you think, I mentioned, you know, 64 million transactions a day flow through. We settle about $10 billion a day in transactions around the, you know, the world. You know, Citibank card used in Singapore and da-da-da-da-da-da-da. That's that roughly 3.6 or $3.7 trillion that I mentioned earlier settled. So that's kind of the history of the company, what we do, where we are, and I'll stop there and open it up. Hopefully we'll have some questions. Like I said, I just didn't have time to get into a lot. I hope you might have some questions that I might can address. I did tell Tim this morning, just don't ask me about RevRec, the new revenue recognition going on. That's the most complicated thing in the world, but I couldn't answer it anyway. Yes?
You've talked about acquiring several businesses, and you began your presentation with your awards that you've received and the culture that you've tried to create. How have you synthesized these other companies with that culture that you've worked so hard to create?
It's a great question. We've only made about well, we've only made 2 large acquisitions. Then on the merchant side, throw in about another 3 relatively small. It hasn't been easy. I mentioned Netspan was in Austin, Texas. They are a blue jean wearing, no socks, you know, the Austin keep it weird mentality, and you know, it hasn't. Great team. We're very fortunate. Super team. Very aggressive. Want to win. The other one, TransFirst, we've only owned them, you know, for just a little over 4 months. Now, they're out of Hop Hog, Long Island, New York. That's a challenge. I kid John Slonsky, who runs it, a super guy, that all the time we were courting, you know, I felt like we had the same culture about taking care of our team members and wanting to win and putting customers first, but we did talk different out of Long Island, very different. It's a challenge. We work at it hard. We try our best. We don't always do this, but what I preach back home is that, you know, what we can't, and we did this for a long time, that Columbus, Georgia was the center of the universe. And I'm telling you, so when we first ventured out and went international, our first move was Mexico, our second move was Canada, then we went to Europe and decided, you know, to build a data center and open up an office in London. And we had our struggles because, you know, it was, we tried to fit everything the Columbus way. I'll give you one small example. Every May, we do Team Appreciation Week. It is a big deal for our company. We spend a lot of money, put a lot of time on it, give away a lot of stuff. Every day is a planned activity. And right out of the chute, in Europe, we tried to force them into the, all right, on Monday we're going to do these kind of games, and Tuesday we're going to have a picnic and give away a T-shirt. You know. And so finally I said, we don't care what you do, but you will have Team Appreciation Week this week every year. And you're going to thank your team members, and you're going to do stuff. Beyond that, whatever they do in the UK, if it's go play soccer, have at it, you know. Rugby, have at it. But you're going to do, so that's the culture piece. Take care of your team members. So it's a challenge, and, you know, only time will tell on the transfer piece, because it is big. You bring in 1,000 people, and now we're trying to integrate them, you know, because we had operations, and our merchant business is primarily in Columbus, Tempe, Arizona, and Omaha, Nebraska. And theirs is in Hop Hog, New York, and Broomfield, Colorado. And you know, many of you have been there, and it can be messy. That's a great question. It's a constant deal. And you know, one of the things we do as well, it helps, is about every 6 or 7 weeks, I bring about the top 500 people in the company down to the Trade Center there in Columbus, and we audio and video it around the world for those to join. And the subject is usually just leadership. You know, we don't try to pick anything that's very topical, like let's talk about what's the United Way in Columbus. You know, it's important, but the people in you know, Kuala Lumpur, Malaysia, are not too interested in the United Way in Columbus. So we try to pick on leadership, growth, things that, again, get that culture, take care of your people, make sure you're taking care of the customers and that kind of thing. So it's constant work. One last comment to that. I know it's long-winded, but I'd be remiss if I didn't say it. It's a wonderful legacy we picked up from Synovus as well. So we just didn't start this when we got spun off. You know, we've been, you've heard the history about our roots. So that's the CB&T way of doing business, the Synovus way, and we all, most of us grew up there, so it helps there as well. Yes, ma'am. Troy.
What you guys have learned at T-Systems with regard to 25% of the households that use prepaid. What lessons have you guys learned, and what is your outreach to the communities and those that are serving?
Great question. If you didn't hear it, it's what have we basically learned in our Netspan prepaid business about those households that play in the prepaid world. Well, we've learned a lot. As I mentioned earlier, up until 2013, we had always been a B2B company. This was a big move for us to buy Netspend, our first move into the B2C world. All of a sudden, we truly have direct customers, a consumer, a big change. For the first time ever, we're in the direct marketing of our own product, telemarketing. You'll find us on television, on certain channels, you know, looking again for that demographics of what we're after. We've learned that by buying Netspend, we've always been examined by the FDIC and the Federal Reserve and the OCC. When we bought Netspend, we pulled in the Consumer Financial Protection Bureau. That's not good. But, you know, we didn't learn that. We knew that going in, we were going to pick them up, so it wasn't a surprise. Another thing that we have found pleasantly is this world is extremely mobile driven. Okay? They do not have checking accounts for the most part. It's the gig economy. They live and breathe with their smartphones. It's how they do their business. It's how they check their accounts. It's how they check their balances. It's how they P2P money. And so we've just had to grow up real fast and, you know, in the digital world. So and then the other thing is, you know, how do you create stickiness with a consumer? It's a little different. We go out and sign up Bank of Montreal or Royal Bank of Scotland or, you know, Walmart Canada, whatever. Those are usually 5 to 7 year terms, okay? Agreements, strong minimums. We go sign up, you know, Troy Woods for a Netspend card, you may keep it a day. You may keep it a week, a month. One bad experience in the trash can, I'm not using it. So it's just a different world for us, and we're learning as we go. Great question. Yes, Greg.
Cybersecurity is a big deal for everybody. I suspect that it really is for you guys. Speak to us a little bit about the challenges that you see every day and the hits that people try to embark on you to try to get into your system.
Yeah, I'm sure everybody heard the question. It's huge. It's, unfortunately, we have quadrupled our budget in the last 10 years around cybersecurity, what we call InfoSec, information security. We have several thousand attempts a day trying to get into our system. They come from China. They come from all around the world. They come from Tempe, Arizona. They got so bad that we have cut off the entire country of China. But what's happened is we immediately started seeing it. So last month, for instance, when we were meeting on our, what we call our Enterprise Risk Committee, the top 2 or 3 sites that were coming into our system were all in the United States. Just towns, just everyday kind of Peoria, Illinois kind of stuff. Well, what's happened is they're just, you know, disguising themselves, as you all know, and so it's very difficult. It's hard. But when you've got as many accounts as we do and the transactions and the dollars, we have to, and you know, where do you find that balance? You know, you never want to wake up one day and, you know, we've had a company right here in Atlanta, Global Payments, that got breached. Great people, I know them well. You don't wish that on anybody. Heartland Payments got breached. Their stock dropped from $33 to $3.40 a share in about a week. Home Depot right here been breached. It's tough, you know, just keep working at it. You know, obviously we moved to the chip, we move into tokenization, and you just keep building firewalls and finding that balance, because if you're not careful, you can get so complex that you can't do business. So it's just an everyday challenge. We all face it, right? Everybody's facing it. Our healthcare provider got breached about 2 years ago. You know, got into a lot of TSIS, you know, name, addresses, and emails. You know, no health data, but it's, yes.
What do you think about Bitcoin, and how will that affect your business in the future?
Well, we continue to look at it. I think there are going to be some applications where Bitcoin and the other cryptocurrencies are going to have some applicability. I personally think that if the federal government cannot get their hands around and control the monetary system, it's not ever going to be a real relevant system, Bitcoin or anything else. I just don't think the Fed and others are going to let those kind of currency just run amok. You didn't ask this specifically, but I think it's tangential. I do think blockchain and those kind of things we're beginning to see have huge potential in the open ledger world, and that's another sea change in our business as well. But you know, I think time will tell, but clearly there are some applications where I think some of these cryptocurrencies are going to have some relevancy. Any others? Yes, sir.
Yeah, my question builds on that question, or the way you answered it, but you mentioned that 15 years ago there were no prepaid cards, and now it's 25% of Americans or American households. Only 7 years ago there wasn't an iPhone. So with these blockchains and other technologies, you know, how do you view the future and the accelerated change within your industry with that velocity and speed accelerating?
Yeah, well, it's obviously something we think about a lot. We share with our technology committee, and we share with our board on our strategy of, you know, stepping up and looking at where the world could go, where payments could go. You know, what's the black swan? What's your Armageddon? We have to think that way. To your point, you know, look at iPhone, and when you think about Apple, and I tell our team this all the time. You know, they start, well, you know, 700 million accounts, we kind of saturated, we kind of matured. There's some truth in that, but if you look at Apple, they haven't invented much, right? The phone's been around a long time. The iPod came around, MP3s, so they've just found ways to rejuvenate and rebuild and reimage, and so we got to be constantly thinking the same way. Our Armageddon, I think, would be if you went around that circle a minute ago, you know, merchant and all that stuff. We are a very Visa, MasterCard dominant world. We need those rails. We need them for merchant, we need them for issuing, we need them for net spend, okay? So I think if something came along to just totally disrupt the Visa, MasterCard world, we're in trouble. We've got some issues, you know. So that's what we constantly look at. You know, you constantly look at Venmo, you constantly look at PayPal and many other things that might could come along. Now, fortunately, you know, those two companies are huge, Visa, MasterCard, and so forth. And we're partners with the second largest brand in the world, that's China UnionPay. We're partnered with them, so we picked a good partner. But it's something we have to watch so you don't get disintermediated or cut out. Absolutely.
So you mentioned in your answer just now and early in your presentation, PayPal, Apple Pay, Amazon, some companies I would have figured would have been competitors, but they're also customers of yours. Can you talk about that co-opetition dynamic that's going on?
Great question. There is a whole, in our business, there is a tremendous amount of co-opetition. There really is. Even Visa, MasterCard do some things that are beginning to encroach in our space. Because think about them, Visa sees every Visa transaction, period. So they began to wake up and say, well, if I'm seeing it, maybe I can do some analytics or fraud. And, you know, you're trying to hold up your hand, wait a minute. But they're a public company, so we do have a lot of co-opetition. What we have found in working with primarily people like Apple, very interesting crowd. We were out there with them Monday a week ago. They do not want to be in most of the businesses we're in. Our operating margin in our company is about 30%. And so why would Apple want to degrade their 55% operating margin? So And when you think about Apple Pay, a lot of people were asking this when it first rolled out of me as investors, well, gee, what's this going to do to your business? Well, we found it incremental. And the reason for that is back to what I was saying to your question. As long as there is an account, we're in good business. And so think of Samsung Pay and Apple Pay. So many of you might have Apple Pay. You've loaded your card onto it, but it's an account, right? So now what may go away is the plastic. I believe over time, the plastic will go away. Okay, just kind of like phone booths and some other things. But it's going to take a while. The wallet, the electronic wallet. But if you pull out your phone and open up your Cap One wallet, or Bank of America wallet, or Royal Bank account wallet, or Synovus wallet, or whatever, you're playing with TSYS. You didn't pull your physical plastic out, but you're tapping the NFC on the terminal. TSYS is involved. We're making the authorization, posting the transaction, billing you at the end of the month, and all of that. Plus, we charge extra for that because it's extra work. So we're charging the issuer, Cap One or B of A, a little extra to what we call provision, token, all that work. If you put a chip on a card, we're charging a little bit extra than a regular card, da-da-da-da-da. So, you know, again, if you wake up one day and we've seen this over maybe the last 20 years, maybe twice, where somebody, the telcos were the last to think about it, where the telcos really wanted to own the world with the customer. And there was a lot of talk and a lot of work and a lot of money spent to maybe create another brand. And it didn't work. It went away. That doesn't mean it can't happen. You know, we've seen big disruptors happen, Uber and some things like that. So, any other questions at all? Yes, sir.
From your perspective, why is merchant payment an option in the industry?
The question was why in this country has EMV stroke chip been slow to adopt? I guess you mean literally, and
Yeah.
it is slow, right? How many have had that experience? I think there are 2 or 3 reasons, and one is always a reason, right? Money. So to re-terminalize this country is several billions of dollars. For all of you that might have a small business or any kind of business that has a terminal, well, that terminal, you know, whatever, 2 years ago, couldn't take a Apple Pay, NFC, or chip. So you got the terminalization, so slow, number one. Number two, just about the rest of the world years ago went to chip to deter fraud. But these countries were not as online as the United States, where like 99% of everything is authorized. And so our fraud was different than theirs. It's one of those generation skipping things. You know, like there's some countries in Africa that are much further ahead of us in the mobile banking. They just kind of skip the 10,000 branches. And so it's that kind of thing. And so it's the money, it's the terminalization. And then I think the third piece is this debate, this constant debate of chip and pin or just chip. Again, most of the rest of the world, because of security, says, well, how can you beat chip and pin? So I got a chip card, and then I insert the chip card, and then I sign. You know, enter a PIN number. The United States has taken the position, for the most part, the brands usually, Discover, Amex, Visa, MasterCard, and the banks. This country's not ready for that. We're the dominant country, of course, when it comes to plastic in the world, largest credit card market in the world. A PIN is just too slow. You know, one more thing to do. Everybody now's got to know their PIN. And the counter argument is, how many go to an ATM? Got to have a PIN, right? But ATM transactions are minuscule, according. So it's all of those. And then the literal slowness of it was just an operational miscue by the brands. And they've worked on that just recently, where they have now allowing the customer to pull the card out of the reader while some stuff's going on behind the scenes. Now, that's psychological because it still takes 12 seconds to do it, but psychologically it's faster because I'm not waiting 12 to get my card out. I'm only waiting 3.5 or 4, but now I take my card out, I take my purse, my wallet, you know, I put it back in, head for my back pocket, and it's over. So it seems quicker. It'll get better, like a lot of things. It'll continue to get better. Yes, sir. Preston?
I know you show a lot of your financials on a currency neutral basis because of the strong dollar. As you've grown the international market, can you talk about the challenges you and a lot of the other multinationals are facing and what you're doing to mitigate that?
Great question. Well, fortunately and unfortunately, it's only 10% of our business. So we're not Coca-Cola. But it has an impact. Brexit alone, back in whenever June, when Brexit hit, it cost us about $7 million just in the second quarter alone, and on revenue. And we indicated on our second quarter call that if that spot rate stayed the same for the rest of the year, you know, it could affect our top line growth rate by 100 basis points. What we do to mitigate it, we do not have a hedge program. We do have somewhat of a built-in hedge, and I'll get a little over my head, but the two dominant currencies, we're in about 6, you know, like the Riel in Brazil and the Russian ruble, but the two dominant ones are Euro and the pound. And so we bill, for instance, our biggest customer internationally is the Royal Bank of Scotland. So we bill them in pounds. Just about everything else you saw up there, dominance I mentioned in Ireland and Deutsche Bank and all that, is in euro. And so you got one against the other a little bit. And then, so what we do is we convert all of our foreign currencies to the euro, and then convert the euro to the dollar. And the dollar, as we all know, up until maybe the last 3 weeks, has been really strong. It's kind of a weird thing, isn't it? The stronger the dollar, the less revenue we'll make. And so it's a conflict in your head for me as a CEO. You know, you want your economy strong, you want the dollar strong, but the stronger it gets, the less revenue I'll make internationally. So we try to report. So that's our mitigation for the most part. We do dual reporting. Obviously, you got GAAP, but we talk a lot about constant currency to our investors and to our, you know, when we talk about our growth, we do talk about constant currency to try to neutralize the impact of the currency. But the two big ones for us have been the pound and the Riel lately. And if you just play the math, you'll see that's about $30 million this year, you know, 100 basis points on our net revenue. 40 million on, you know, I mentioned earlier we do about 4.2 billion, so 100 basis points would be $40 million just by the currency fluctuation. Good question, though. Any others? Well, Zach, Ben, thank you very much. I appreciate it. I think we're on time. Thank you. Thank you, Ben.
So, Troy, let me present to you a nice red and black sculpture so you know the color scheme here.
Yep.
Thank you so much. Go dogs. Yeah, go dogs. 2 reminders, got the surveys on the table, so if you have a second, please complete those, give us some feedback, and then if you would like for us to pay for your parking, make sure it's validated on your way out. Enjoy the rest of August. We look forward to seeing you in September. Thank you.